So Amanda, welcome to the CrossTech Interview Series called CrossTech Connect. Thank you for joining us today. Tell us a little bit about your background and your company.
Yeah, definitely. So I have a long background in finance. I studied it. I started in investment banking advisory, working for financial institutions. And then I've gone industry side into fintech, working on innovating in the space. So currently I work at Lightspark. I am a product lead for payments there. And ultimately what we're trying to do is create a new infrastructure layer to optimize money movement.
Great, so tell us more about this. You guys are reshaping the way money movement is architected.
Yeah.
How are you doing that?
Yeah, so if you think about payments or really any kind of money movement, there's two tasks, right? You talk about it and then eventually you do it. And so we can kind of distill this down into the messaging layer and the settlement layer. And so throughout payment innovation, I think we've spent a lot of time working on optimizing the messaging layer. We have standardized protocols, fields, ways to do RFIs, things like this. But not a lot of time has been spent on the settlement layer. And so we're still relying on this correspondent banking model where depending on where I'm sending money, you could have 2, 3, 4, 5, 6 correspondent banks in the flow, each taking a cut, making settlement times long and expensive. And so at Lightspark, what we're thinking about is not only can we optimize the settlement layer, but then also can we collapse these two tasks into a single flow?
Okay. So that's interesting because that's exactly what Western Union was doing when I started, a long time ago. But essentially they send messages, but the settlement still happened on banks. And that was a big expense and also very slow. Then you had to pre-fund accounts, which made it very expensive for some people. So what technology are you using to enable that?
So to speed up the settlement layer, we're actually building primarily on Bitcoin. And the reason that we're doing this is that we've kind of drawn a comparison to email, right? So I can send a Gmail email to an iCloud account and you don't think twice. I can send an email to my friend in Japan, you don't think twice. And so we're taking this framework and applying it using Bitcoin, and in this case sats, to be the information packets of money movement. And by doing that, you sort of collapse it down into information packets on a neutral network, and then you can define where you want to send, how much, what asset.
Right, so that's a great analogy because, and somebody brought it up, it may have been you yesterday at the stablecoin discussion, that you don't understand how email travels. All you know is you have a Gmail account, you send an email, it's picked up on a local network somewhere else in the world and it's instant. And I think if you talk to new generation that are used to this, they probably don't understand why money doesn't move the same way, right?
Exactly. Yeah, I mean, even I think that way, like why do 7 banks need to speak to each other and bounce my money around and have me pay, what, $30 on a $100 transaction, depending on where I'm sending it? It feels like there can be a better way. And ultimately, I think this new era of distributed ledger technology and crypto assets is unlocking the way to do that.
Right. And you guys think a lot about interoperability. So tell us more about that as a strategy.
Yeah, so like I said, we're in a time of crazy innovation. There are, 15 different blockchains. There are many different crypto assets. And so it's exciting because it's a time of innovation in the space, and there's a lot of businesses and companies developing these different technologies. The issue is that they're each developing this in their own way, maybe using their same or different constraints, maybe optimizing for different use cases. But to a traditional payments or remittance company, that doesn't help me, right? Like, I don't want to become an expert on a million different blockchains and assets, let alone to start with, and number 2, then make a decision on which permutation of these things do I use to optimize for my use case. And so at Lightspark, what we're doing is we're abstracting away that complexity of innovation that's happening in the space to a single layer called the Grid API. And so me as a traditional financial company, I just have to define my primitives. Who are the counterparties in this transaction? Where am I sending the money? At what rate? In what currency? And then I'm good to go. And ultimately, if I can just define those primitives and then I can go pitch to a client, hey, I can achieve this in 7 seconds instead of 5 days, you're winning that business.
Right. And one of the big advantages is once you participate in the system, you have access to all the participants. You don't have to, like old correspondent banking, go and set up correspondent relationships one by one with each country, with each bank or financial institution, right?
Yep. Yeah, and so I think when we think about this sort of like ecosystem design, it harks back to this interoperability. So you have different rails, you have different exchanges, you have liquidity providers, custodians, et cetera, for all of these different assets. And that's fine, but if they can't speak to each other, then you have another problem. And so the way we're trying to solve for this at Lightspark is that the lowest layer of our technology, the protocol, the foundational layer, we've chosen to open source that. And so ultimately, you know, if you have a technology team and the capacity to do so, you don't have to interact with us at all. You can just go integrate with our protocol and tap into the network. Of course, we provide optimized SDKs and value-add services on top if you want to streamline or speed up your integration. But regardless of the way you choose to tap in, once you tap in, you get access to the entire network.
Great. And how about risks for a bank that's participating?
Yeah, that's a great question. So we've spent a lot of time thinking about that because the foundation of any sort of money transaction is trust. And I think especially here at a conference with a lot of traditional partners, that's huge. And so for new sort of younger technology companies in the space, how do you establish that trust? And we at Lightspark have spent a lot of time working on our regulatory stance. So we're SOC 2 compliant. We have a regulated subsidiary called Lightspark Payments. This is a registered virtual asset service provider or a money services business. We have MTLs. And so I think the more that not only us, but all the participants in the network, the more they can interact with this sort of like regulatory framework, the more trust we'll have in the entire system.
Got it. And so who can participate? Do I have to be a licensed financial institution? Do I have to have an MSB license?
Not necessarily. So it depends on how you choose to integrate into our system. So if you use sort of the Lightspark SDK to tap into the network, you can go through all of our regulated entities and our licenses. And so you're just here, you want to participate, we say, okay, let's do it. If you want to natively integrate, then it depends on what you're trying to do. Are you trying to move fiat currency using crypto assets as a settlement layer? Are you trying to just exchange into crypto assets and land it there? Depending on the type of money movement you're doing, if you natively integrate, you may need different licenses.
So would it be correct to say if I'm using it for a transaction, it's one approach, but if I'm going to hold eventually crypto or fiat, then that needs to be licensed?
Only if you're choosing to integrate entirely natively with our open protocol. If you go through Lightspark, we abstract away all of the compliance and all of the regulatory requirements for you.
Okay, well that's a good proposition. That makes it easy for people to join.
Ideally, what we're trying to pitch is effectively crypto as a service. So if you want to be involved in crypto, if you want to learn about distributed ledger technology, go for it. Integrate with our open protocols, but if you don't want anything to do with that and you just want to define your primitives and offer a better value proposition, we can do that too.
Great. And then what about cost? Because that's always a question. The industry is very cost sensitive, especially in cross-border payments. And how does these costs compare to traditional methods?
Definitely. So I think the value that crypto assets and distributed ledger technology have is that the number of participants in an end-to-end transaction flow, depending if you're landing into fiat or a crypto asset, is heavily reduced compared to correspondent banking. And not only that, the actual rail that the money movement is moving on is a lot cheaper, especially true in Bitcoin. So we operate specifically via Lightning, which is a layer 2 protocol on top of Bitcoin. And effectively what that means is that we're fully interoperable with Bitcoin, but it's a lot faster and a lot cheaper than logging transactions on the layer 1.
Right.
And so this takes fees down to cents or less than cents from a direct cost perspective. And the value proposition that has for traditional financial companies is now you have a lot more play in your margin of what you actually want to charge.
And how do the on-ramp, off-ramp cost play?
Yeah, so for on-ramp, off-ramp costs, we, number one, have gone first party in the US, so this is our money services business, and we have also acquired a fully licensed EU entity called Striga. And so in those scenarios, we can cover those costs directly. In other corridors, we work with partners who have the ability to convert between Bitcoin and domestic currency and off-ramp. But these partners are working on the same layer that we are. So they're operating in Bitcoin, they're operating on the same rails, and effectively they have the same direct cost advantages as we do. And so each side has that same play and margin.
Right. Well, that becomes very interesting in that case. Can banks participate as well?
Yeah, of course. So Nubank is actually natively integrated into our stack. And more recently, SoFi is the first fully regulated US bank that's entered our network. SoFi did not natively integrate, so they used some of our SDKs and our services to tap into the network, but they have full interoperability with everyone else.
So only the two largest neobanks.
We're pretty excited about it.
That's terrific. And tell me a little more about your particular technology choice.
Yeah, so for Bitcoin, I think the core tenets of Bitcoin, neutrality, privacy, security, those speak to all of the things that you care about when you're interacting with money. And so like I said, there's a lot of distributed ledger technology, there's a lot of different crypto assets, stablecoins are huge right now. But ultimately, what's happening in those other areas are walled gardens are starting to be built.
Right.
And so this is sort of like a closed system with a particular permutation of chain and asset and protocol. And so you kind of, harking back to traditional financial businesses, you have to analyze this walled garden and make sure that it's the correct permutation of capabilities at the right cost for your use case. And by building on Bitcoin, it's neutral, no one controls it, it's not tied to a government's currency, it is just information packets. And so no one can manipulate it, and that's why we believe it should be the foundation by which money moves over the internet.
Right, which, I mean, pre-Genius Act, at least in the US, you always had the risk of these stable coins not being stable at all. Which brings me to my next question. You know, when people hear Bitcoin, there's always this fear of volatility. Well, you know, if I send it when the Bitcoin was at, 91,000 and now it's 110 or vice versa, 75,000. And I think the speed at which the transaction executes render that risk nil. Is that correct?
Effectively, yes. So what's interesting about our capabilities, in particular with remittances, is that Bitcoin is just the settlement layer. So me as the customer on one side of a transaction, I have no idea that crypto is even involved. This is just a really fast, really cheap remittance. And so the way this works is this layer 2 Lightning network that we actually interact on. And so if you send Bitcoin over Lightning, that part of the transaction happens in milliseconds. And so the volatility that you're exposed to is effectively nothing. Really, at the end of the day, it's a fiat to fiat transaction using this technology as a settlement layer.
Right. That makes sense. And how are you going about signing up participants around the world? Because that's, the big part of it is if you have only one fax machine and you can't fax anybody, you've got an issue. Right.
Wow, fax machines. I didn't think I would be talking about that here. So I think it is really awesome. Like I said, we have totally open protocol, so folks can go to our website or to our GitHub and look at our documentation and just integrate immediately. Otherwise, you can come to our website and actually review the types of SDKs and services that we offer to streamline your participation in the network. And specifically, what we've launched recently is something called Grid API. And so this kind of breaks apart all of our capabilities into modules. And so if you are, say, a fully regulated bank and you only want to move money to a particular corridor in a particular fashion, you can sign up for only those modules or integrate with only those modules. However, if I am an unregulated fintech that's just a wrapper on top of a lot of technology and I want to optimize for UX and that's it, I can sign up and I can say, hey, I need you to do my compliance too because I'm not regulated and I serve a bunch of customers. And so you can opt into the compliance module and the money movement module and the conversion module. And so I think by breaking up this capability into different modules, we can be a lot more flexible in the types of businesses that we serve and the types of use cases that we serve.
Great. And that's a good approach to it, yes. And mostly, I guess, it's online marketing for you. You don't have people knocking doors every country and trying to sign up people.
No, thank goodness. Our sales team would get really exhausted after that.
Yeah.
No, it's entirely online. I think what's awesome about this era of innovation is that there's a lot of self-starting in the industry, even with traditional financial companies. And so, you can come to our website. Of course, our CEO and our team is around on podcasts and doing news sessions. We come to conferences like this to meet folks in the industry. But yeah, it's really organic because I think to participate and to have like the self-starting nature to get involved in this level of innovation, people come, they're looking for ways to improve their experience.
And so yesterday's session, I think, was helpful in that way, but how do you guys simplify the messaging so that people who don't understand the technology very well, who has risk apprehensions around it, can feel comfortable to sign up with you?
Yeah, definitely. So one of our first developments, this was announced a couple of years ago actually, is called UMA. So it's Universal Money Address. And it serves a couple of different functions. Number one being how you identify a counterparty in a transaction. So effectively it looks like an email address. There's a $sign at the beginning so you know that you're sending money. And this is what you can use to identify the recipient of a payment. And so if you want to send directly to an IBAN or a CLABE or a bank account and you know that information, great, we can do that too. But if you want to simplify the experience, we have this universal money address. And so what that's actually tied to underneath is something called LNURLP, which is a standardized messaging service that's compatible with Lightning. And so what this does is, like I was talking about earlier, it collapses messaging and settlement into one layer. So in one flow of API calls, you can identify the counterparty, you can run sanction screening against the counterparty, you can exchange travel rule information with the counterparty, and you can move the money.
Yeah.
And all of that is wrapped up into a single protocol.
So you guys are really making it like as simple as sending an email now.
That's what we're trying to do. And that's what, honestly, that's what we come back to anytime we're thinking about developing a new product or spinning up a new product line or breaking apart our product into modules. Like, what are we trying to accomplish? How do we avoid the walled garden scenario? You have to be able to send money like email.
Yeah. So speaking of which, and last question, now that we're on email, have you ever sent a fax or used a beeper?
I haven't. I think
Why am I not surprised?
I think my oldest technology, maybe I'll get some clout. When I first started at JP Morgan, we were still using Blackberries with full keyboards.
Yeah.
And so for 1 year, during my time in investment banking, I did have a Blackberry with a full keyboard. And then the next year I got an iPhone.
BlackBerry was a breakthrough when it came out.
Yes, I loved it.
There was
fun.
Palm Pilot before that, but you couldn't send anything anywhere at the time.
Yeah.
It was just a digital agenda. Well, Amanda, thank you. That was very helpful. I learned a lot from you, and I hope our audience learned too. And I wish you good success at the conference. Thanks for participating.
Thank you so much. Thanks for having me.
Appreciate it.